right, so we're here going to talk about some important, equity stock issues we got going on in the world right now. So, July's been a really big month for Chinese stocks, and not really in the best sort of way. So, in July, this main index of the largest Chinese stocks in the United States fell 22%. That is the biggest sell-off since the financial crisis. It's a really big deal, and even more importantly, over the last, three, 4 months since February, basically $730 billion in value has disappeared from these major companies. They've been wiped out of the pricing. And this is a really, really big deal because it gets at a lot of stuff that's going on both in the global economy, in Chinese regulation, in the US China relationship, and all of it is coming out in these numbers. They really are an important barometer of kind of how things are being read by people all around the world. So a lot of people don't like to hear that, oh, markets and pricing and all this is actually incorporating information from around the world, but it often is. And this is definitely a place where we got to know what's going on. So today I'm just going to talk really briefly about what is up with this, why is it happening, what does it mean, where is it going, blah, 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 blah. Maybe at the end I'll give some random, I don't know, stock advice. I don't really give any financial advice. I'm not a financial advisor, but, there's probably money to be made, so people should check it out. You know, you got to at least know what's going on. If people are betting on GameStop and AMC and all sorts of weird stuff, then you might as well know what one of the bigger stories might look like. It's pretty useful. So everyone is acting surprised, like none of this was expected, but that's really just not true. We've been looking at something like this happening for a very long time. The U.S. and China have been at each other's throats, and the U.S. has threatened to delist different companies and to crimp the Chinese access to the U.S. financial system, et cetera, et cetera. It's been going on for years now throughout the Trump administration, but we just haven't seen it reflected really in markets in this sort of way yet. Well, here it is. And what we're seeing is really a perfect storm. People need to not buy the Chinese tech growth story of the 2010s in the 2020s. It's going to be a very different sort of story. In the 2010s, there was a real massive growth in the Chinese tech platforms. Alibaba, Tencent, the whole WeChat, Alipay system, all of these things, all the different rideshare companies, all of these sort of, original imitations, but also very unique companies in China doing mass leverage tech sort of operations. These were the main growth story in the 2010s. And a lot of people thought this would be the same. It would be the equivalent of Facebook, Amazon, Google, Microsoft, in the US. It would be a similar story out in China. But things are really changing. They're really changing, and the Chinese government is actually leading the charge on these changes because it has way more control and way more interests at odds with what's going on than you see in the United States, where there's a lot of pushback against these tech companies, and we'll probably see something happen, but it's really not at the same level because we don't have the same level of political risk just within the country, internal to the country, that China sees. So, yeah, let's talk about it. This perfect storm is basically there's new foreign investor rules, very boring. There's all the sorts of new data rules, also sounds very boring. And then there's just these changing Chinese government tech priorities. So foreign investor rules, basically it's you don't own anything. When you own a share of anything in China, you don't actually have ownership. You don't really have control either. You can't really change the management. You can't really do proxy fights. You can't do what happened with Exxon. You can't really engage in any of this stuff. And people have known this for a while, but they've wanted in on the gain. So you want your shares to be worth more 10 years from now, and then you sell them. You haven't been as interested in what happens. But now this lack of a real equity sort of system, like the traditional ownership and control structure that we're used to in the West, is going to hit a lot of people, and it's hitting a lot of people now because there were a lot of often bizarre, baroque sort of financial, legal, and sort of tax vehicles that were created to try and make these companies accessible to foreign investors and get around certain rules and all this kind of stuff. And people piled into those through Hong Kong and other places. And it's kind of blowing up in people's faces right now. So that's part of what's going on. China's cracking down on a lot of these obscure investment vehicles that people were using to get around things, to avoid things, etc. China's not as interested in that happening anymore. It wants, well, foreign money to pour into the country, but also doesn't want foreign money, well, doesn't want internal Chinese domestic money, but sort of pouring out. And that's kind of where the battle's been being drawn right now. The lines are being drawn. This is what was going on with Hong Kong. This is going on in a lot of areas, and this is one of them. And the more important thing is there's this huge tech sell-off, but a big part of the story is not just the large companies in general. It's large Chinese tech companies, like we were saying. It is companies like Tencent. It's companies that are enormously important in China, the same way that Google and Facebook are very important in the United States. And honestly, arguably, they're even way, way more important. They're nested into like every sort of behavior that people do. It's all done through their tech platforms. They've consolidated so many services. They've consolidated financial activity. They've consolidated just everything, messaging, everything. And that is actually kind of where US tech companies want to go. So people should also watch all this stuff because China is getting there first in terms of regulation. Not saying that anyone in the West should copy Chinese regulation on this in this area, but it's going to be the barometer for what's going on. Europe doesn't have major tech companies the way China and the United States do, so its whole perspective is very skewed. It's more trying to insert itself into the regulatory scheme and trying to make it more relevant in this area that it's the largest new sort of modern tech company platform in Europe is Spotify. So that's really not quite on the same level as a Huawei or a Tencent, or let alone an Apple or a Google. So that's part of why you're not going to see people looking to Europe in the same way. And there's going to be a lot of real challenges in the European attempt to regulate American and Chinese tech companies, especially with the lack of consumer markets there. There's going to be major problems. But what China is doing is very profound, I guess you could say, not in the sort of the good sense, but it's very impactful. I mean, basically what China is saying is that data is like land, labor, and capital, and it is going to be regulated by the state on an insane level. And that is something people in the West resonate with when there's so much corporate control over data, over media platforms, over access, over all this sort of stuff. But nothing is really moving in the US like it is in China. And China is putting huge risks for these large tech companies in China. I mean, they're all going to be transformed in certain ways. The biggest one we've seen is basically Ant Financial, which was an offshoot of Alibaba, and it was supposed to have the largest IPO on Earth a couple months ago, but it got nixed because of this. I mean, this company, this Ant Financial, had used all of its data to become a premier sort of financial entity, and it was doing really well, but had none of the regulations similar to banks. It had a lot of risk. It had a lot of very worrisome things to the Chinese regulatory authorities. And in China, they're very worried about what used to be kind of still called shadow banks and things like that, and basically off-book financial transaction mechanisms, payment mechanisms, and just storage and payment wallets, that kind of stuff. All that stuff is all these investment vehicles. I mean, there's so many bizarre things going on in the shadows that Ant Financial was really able to sort of consolidate in a really sophisticated way, and it was terrifying to the Chinese government. Obviously, Jack Ma also pissed off Xi Jinping and criticized the government, which also is a good move, and that's provoked a huge crackdown on all of the big name CEOs of these tech companies. So the similar people to like the Elon Musks, the Jeff Bezoses, all of them are basically starting to kowtow to the government to say, yes, we know it's China. The private sector does not rule here. We're going to donate to charities. We're going to donate all this stuff to, feel good. We're going to back away. A lot of companies are, the JD founder, a bunch of them are really trying to pull themselves back because they don't want to be the person that sticks out, really, because you can really be used to deter other people. You're being targeted can be very useful for the Chinese government when it's trying to regulate the activities of all of these different companies and their future plans. So you don't want to be the one that gets knocked. And these rules, these new data rules, these changing rules are not like something we've seen, and they're going to really change. Like, so this would be the equivalent of if Google had to give all sorts of data to federal agencies, state agencies, maybe even other competitors. All of this is transforming what data is going to mean in this decade. And something like Bitcoin is trying to do the same thing. It's trying to have a new interoperability sort of system where all the different user tables and data accumulated in all these sort of walled gardens of the tech companies, the big tech platforms, are somehow brought out into the open. And this also applies to financial entities. So the symbiosis between taking in deposits and lending out, lending between deposit taking and lending is changing now that information flows are giving you even more nuanced stuff regarding creditworthiness and all of that than you can get from a typical credit report. So tech companies now are better than banks, traditional banks, at actually evaluating who might be good for credit, for what sort of purpose, blah, blah, blah. All of that is totally being revolutionized right now. And this question of where does the data go, how is it controlled, who's going to be able to do it, all of these are going to be huge questions. And China is answering them right now. It's saying all of it belongs, it's all at the service of the state and state stability, political control, economic stability. All of that is more important than any sort of private profit motive or individual liberty in any way. So, or individual control over the data, all sorts of things that are more prominent in the West and in Europe, or America and Europe. That ain't what's going on in China. And it's only been a matter of time before this started to percolate into the financial system, into the markets, and people will start to see, okay, something very different is going on. You're just everything these companies are doing is being regulated in new ways. The ride-hailing apps are regulated in new ways. Everything. It's widespread. And what the problem that is coming up is that, the problem that's coming up is basically people don't know how to value these anymore. No one knows how to value Chinese equities broadly and then tech companies specifically. Because how do you deal with the geopolitical tensions going on right now? How do you evaluate whether the US-China conflict is going to impact this specific stock? I mean, it could send your stock to zero. It could just have it knocked out. There's all of these things. I mean, it's the same. The political risk in China with all sorts of companies getting hit, that you have no access, you can't change management, you can't even read. The accounting systems they're using are different because for all sorts of reasons they don't want things going on in state entities or joint ventures, all these things to be seen by other people. So you can't even get a good read on what's going on the actual company inside China. And then what do you do with tech, with the US and Chinese tech worlds, universes, systems just start to continue to decouple the way they are? If things like Huawei or the attempt to knock TikTok out of the US, if this keeps going on, how do you evaluate the prospects for these companies? Because if you get into a big tussle with the United States, it's not just your ability to have your product in the United States that gets impacted. It could be your ability to have it throughout a bunch of Western countries. This is what happened with Huawei. So no one knows how to deal with this. And then obviously financial decoupling. If you start not allowing people, Chinese companies or Chinese people affiliated with the Communist Party or any of these people to even access the U.S. financial system, to list companies, to issue debt or stock, it is unprecedented. No one knows how to price this. It's unprecedented, and no one knows how to evaluate the risk. There's no model for this. There's no priors, no Bayesian priors for what we're seeing. This is, again, with the Soviet Union, with Japan, with all of these prior situations, there was never this level of interconnection. Well, with Japan there was, but it never reached this sort of stage. It didn't even get close to this. It was just it ended a very different way. China, it's moving much farther and into a much more unpredictable place. So no one knows how to price this. So there were all sorts of weird bets being made, and as more information came in about what's going on in China, how big this push to control the tech companies is, to reevaluate the Chinese system. I mean, so what's going on too is that these tech platforms, the Googles, the Facebooks, all that, they're no longer seen as the vanguard of technology in China, kind of just like they're not in the United States. No one is looking to Google to transform the world anymore. No one is looking at Facebook. No one's expecting any of that. Apple, maybe there's something, but not really. It's just like iPhone 20 is coming out, and the Chinese Communist Party is also not. It's no longer like in the 2010s. It thought that these would be the large companies that would help it take over the world, stuff like that, take over the world in a sort of economic market sort of sense, and this is now changing. China has very different priorities these days. And there's just trying to, so this question of how do you actually get the Chinese system, which is evolving to sort of mesh with the US one? And that's a real question. So that is something that people don't quite know how to deal with. And the US political actors typically give different companies, different investors, sort of some sort of understanding of where things are going, but there's no good read from either the US or China on like what to expect. I mean, what they're pushing towards is, hey, our systems are splitting in many ways, like that things aren't going to be the way they are, but everything is still actually coupled together. So it's just a real problem, and people need to like look at this stuff. It's like you could have real problems in these markets, and trying to actually figure out what to do, how to price these, what to buy is, I'll get to it in a little bit, but like it's very complicated. And yeah, for especially specifically for these tech companies, these Chinese tech companies, this is where the rubber really hits the road. So these companies, like I said, China wants semiconductors, it wants advanced aviation, it wants AI stuff, it wants all of this stuff. But what specifically, like, does it want a better search engine? Does it want a better social network? No, it wants something more like a better social credit system. It doesn't want, like, a lot of the things that were hyped in the last decade, these are all shifting. And the centrality and priority of these tech platforms is disappearing. I mean, I don't want to say disappearing, but it's really changing. And there's again, this is the uncharted territory thing. Like in the U.S., the government doesn't have the power to just unilaterally start totally transforming places, either implicitly or explicitly, places like Google. It just doesn't have that power. It doesn't have the ability to sort of extract things from it or change its. I mean, it could, but it doesn't. Congress can't actually legislate any of this stuff, so it's not happening anytime soon. In China, it's very different, and as it sours on these tech platforms, it's like there's going to be casualties. There's going to be casualties, and people have no idea which ones are going to be casualties, which aren't, and it'll be very tough. I mean, things like Uber, things like the equivalents in China, or all the DoorDashes, all this, and their equivalents in China. These aren't great businesses in the first place. They don't make heavy profits. They were supposed to expand globally, and they don't make enough per transaction to really justify themselves. So those are already getting hit pretty hard. China sees them as troubling a lot of public services, specifically on like the DD side. And then with the like food delivery, in China there's a huge problem over labor and over the inequality issue, just like there is in the United States. So inequality in China is like really bad. I mean, a big reason why these tech company CEOs are retreating sort of from the public eye is because China is very focused on this inequality issue, kind of like the left in the United States. But it's so much more of a threat. There's so many hundreds and hundreds of millions of people who are in almost poverty that it's a really bad thing. If you're running around in a rickshaw with to bring someone food, and versus the overlord at the tech company. I mean, these are very tense things, especially in certain more marginal industrial cities. It could be a tinderbox in a lot of ways. So, and at the same time as food prices are really rising, these are things that could just cause a conflagration in a way. So China's definitely running at them pretty hard. But the bigger thing is really this: we need to start accepting that the Chinese foreign growth story of all these tech companies is probably over. So when China starts to reassert control over data, over even management control with new party operations inside these companies and party officials, this is the end of the attempt of these companies to go global. They're not going to be able to, especially as the US-China thing gets bad, you're not going to be able to do this anymore. I mean, this was the great story until 2015, 2016, when there was a stock market crash, that China was going to go global. The national champions would become global champions, but that's unlikely. Huawei's smartphone business got killed. Its sort of 5G business is under huge threat. And the U.S., again, people thought, oh, the U.S. is nothing. It can't handle this. It can't do this. China's going to do whatever it wants, blah, blah, take over the world. Well, no, there's a lot of things the U.S. is doing, and it immediately started killing a lot of these companies, at least in their foreign sales, foreign operations. and with Huawei, it almost killed it entirely. And it's very unclear how a couple of their business lines are even going to survive. But that's a different story. But the broader story, these national champions are going to stay national champions. They're not going to be world champions, or if they do, it's because they're within China. Their innovation is now connected to the Chinese market in a way that is, I guess, similar to Alipay, to WeChat, to the indigenous, what happened with these indigenous Chinese tech platforms, where they expanded to become way more pervasive and omnipresent than a Google or a Facebook. And if they internally manage to keep the innovation going, keep the tech steamroller moving, that could be a very big thing. They could actually become world champions by not sort of going global and moving into all these international markets, which is how it was originally conceived. That is just going to be very tough, though. As you have more controls over the tech platforms, over what they do, over how they act, over all that kind of stuff, it is very difficult to nurture the same level of innovation. I mean, there's big reports now that people in China are starting to look towards state companies again for, not reassurance, but basically reliable paychecks. I mean, the brutal 60, 70-hour weeks that people were doing at these tech companies were only justified if you had equity, if there was big liquidity events, basically if you had, got rich when an IPO happened, and that isn't happening in the same way. In fact, these companies are getting pulled down a couple notches. The Chinese government wants them to sort of take them down a peg or two, and well, that's going to really change the culture and the effort and behavior of these companies and what's going on in the sort of tech sphere. A lot of innovation in China right now in the tech sphere is happening regarding just like surveillance and AI and things that are associated with public security and stuff like that. And it's not the same consumer focus. I mean, there is that consumer focused stuff, but there's not quite the same. I mean, there's this very different side to the tech story in China now, and the Chinese government, I mean, all of those companies on the defense and surveillance side are being all blacklisted by the United States. So China has to keep them alive and nurture them anyway. And who knows? I mean, maybe that is the future of the Chinese tech world, is going to be something driven by the sensor, AI, surveillance sort of companies. But again, that's a very dystopian thing. I don't know if you're going to sell stuff like that to Guatemala or Cuba or whatever to enhance their government systems and control systems. I mean, that's one story, but most likely these are not going to be huge foreign successes. And to be honest, they're probably going to be like, when China starts to sell that kind of stuff abroad, there's already going to have been a major decoupling. Like, I mean, like, not it's already been doing that, but doing it on a mass scale or trying to, or actually marketing it, that means things are way far gone, because that's definitely not kosher to the liberal democratic world or whatever people like to call the West. So that is a major transformation. I mean, if the vanguard of Chinese tech as we kind of knew it, like, there's all sorts of tech that China really wants, like I was saying, space technologies, aerospace stuff, agricultural technologies. But the platform era, if that's going to be moving to large sensor-based control systems, it's a very big change. And there's nothing comparable to it in the United States, which is going to be very scary for a lot of people. But I will just end this off and talk again about the stock situation. These large tech companies in China, Tencent being the main one that kind of got hit recently, why I've been referencing it, these companies are probably not going to get knocked out of the U.S. system like immediately. They could be sometime in the future. But their long-term success in the United States is very dubious. Just straight up, it's going to be very hard for them as things continue to move down this path for things to ever really work out, I guess you could say. There's the main Tencent or Alibaba platforms. They don't exist in the United States the same way Facebook isn't allowed in China. The sort of game studios and other things that Tencent is invested in, many other things it's invested in, those can continue, but there's no main products outside of something like TikTok in the U.S. in the same way. There a lot of these, the platform part of the Chinese tech platforms is in China, just like the U.S. tech platforms are in U.S. and the rest of the West, and this is going to make them pretty vulnerable in a lot of ways. So that is a real thing. And the dubious sort of money grabs you saw with Didi, and where people just, oh, quick, and then Chinese government, you list, and then Chinese government like knocks it out. It's like, oh wow, you got a couple $1 billion really quick. That's already very probably securities fraud. It's very close to it at least, and it really wouldn't take much to make all that kind of stuff stop. But in the meantime, Chinese tech stocks, you could always make money playing the swings. I mean, you could lose a bunch of money too. Don't go crazy, but like, yeah, there's gonna be ups and downs. This may be a great time to get into the Chinese tech stocks because they've lost a bunch of value. And if you see things going well, you can sort of play it. But these are gonna be rough waters. And the long-term thing is definitely not to bet on all these companies having great U.S. financial assets that you can invest in over the long term. I don't know a lot of things that point to that being the best idea, but I hope that was really helpful. What we're seeing, we had the tech crackdown for a long time now, a couple of months, but it hadn't been reflected overall in like a major event. So money's been shedding off these companies for months, but there's no major event kind of moment until a couple of days ago where it became clear, like, oh wow, like there's a lot of shifting investor sentiment, shifting government sentiment, shifting popular sentiment that's kind of crystallizing. And that's what happened, and we'll see where it goes, but